Hello dear traders, my name is Tim and I'm a senior analyst at AMarkets. Today I want to tell you about some trading ideas. I'm sure that they will help you to effectively use the current fundamental background and current situation in financial markets and of course make money on it, because this is our main goal, make money in the financial markets, and I think you will agree with me. After it, I will summarize the results of contest and randomize the winners of the AMarkets Spring Raffle, and all you have to do is contact your personal manager and take the prize. So before we start, keep in mind, if there are problems with video, presentation or sound, write in chat. I will fix it as fast as I can. Today I want to tell you about the dollar, gold and black gold oil market. I'm sure that some of these assets are definitely in your trading portfolio, maybe all these trading assets. So I analyzed the dollar for a long time. I really love this asset, guys. The dollar index, as expected, fell and updated the minimum level since April 2022, coming close to the psychological support of 100 points. Traders continue to assess the prospects for US monetary policy, and you know, this is right. This is the most important thing right now. Everyone wants to know if the regulator will raise the rate. In order to understand this, you need to analyze macroeconomic data. 2 weeks ago, traders were presented with data on US labor market. Look at this slide. Let me remind you that unemployment in the US in March increased by 236,000 against the February figure of 326,000, while the unemployment rate fell, just a second, from 3.6% to 3.5%. Even third, the report showed that the unemployment rate remained at historical lows. The pace of new jobs creations was the lowest in more than a year. And it is very important, because a weak labor market proves that it will not stimulate inflation. This data, coupled with weakness of industrial sector and the service sector in the United States, as well as the backdrop of bankruptcy, 2 US banks last month, points to a slowdown in the national economy. Under such conditions, further tightening of monetary policy may put additional pressure on the American economy. I hope, guys, this is clear. If you have any questions and something is not clear, please write to the chat. Similar opinion said Rick Reader, investment director at BlackRock, the world's largest investment fund. He said that the Fed doesn't need to raise rates to fight inflation, unless it wants to bring recessions closer. One more significant argument regarding the wait-and-see attitude regulator is to reduce inflation in the US. Look at this slide. The US Consumer Price Index fell from 6% to 5% in March, better than analyst forecast of 5.2%, while the core figure, excluding energy and food prices, rose from 5.5% to 5.6%. The downward trend in inflation pressure was also confirmed by the report on a producer price index in March. Just a second. According to which industrial inflation fell by 0.5% in monthly terms and slowed down from 4.9% to 2.7% in annual terms. Disappointed, guys, and retail sales in the US. In particular, retail sales decreased by 1% against the forecast of a decline of 0.2%. So these reports have caused even more traders doubts about another increase in the key interest rate. Agree, why tighten the policy when there is still uncertainty in the banking sector and inflation is gradually moving towards the 2% target? The logical question is, what does American regulator think about all of this? Minutes of the regulator's last meeting, released previous week, showed that most of the representatives supported the idea of an earlier end to the current cycle of monetary tightening due to the risk of pressure on the banking sector, as this could trigger a recession, and I agree with it. New York Fed President John Williams said on Tuesday that the central banks needs to keep a close eye on the data and cut interest rates if inflation slows. As I mentioned earlier, inflation has decreased. And you know, if all that Williams said previously, if all that Williams said were not empty words, the regulator needs to think about the end of current cycle of tightening the national monetary policy. So, what can be the conclusion? I believe that the Fed's wait-and-see attitude at the May meeting is the only one correct decision that can be made in current conditions, namely against the backdrop of declining inflation, a high probability of recession, and uncertainty in the banking sector. For this reason, I recommend short the dollar index. Gold last week hit a high since March 2022, $2,040 per ounce. At my webinars, I predicted that the growth of gold could no longer be stopped and this level would be reached. And of course, as you see, I was right. In addition to the weak dollar, fears of an economic downturn, gold was supported by growing demand from institutional investors. Look at this side. A report by US Commodity Futures Trading Commission showed that the number of net long positions in gold last week increased to 195,000, a maximum in more than a year. This proves that investors are increasingly choosing gold as a safe haven asset in the face of ongoing economic uncertainty. Besides, I draw your attention to the market sentiment of AMarkets, according to which, right now, 75% traders are short gold. Recall that the markets always moves against the crowd, so the path of least resistance for gold now is up to new all-time highs. We recommend considering buying gold with a target of $2,100 per ounce. Analysts Citi and Goldman Sachs have the similar goals. And guys, a few words about oil. Right now, Brent is consolidating near $85 per barrel. Most analysts are confident that the next target for Brent could be $100 per barrel. I agree. By the way, what do you think about it? Write in chat. Prices continue to be supported by the decision of OPEC Plus countries to further reduce oil production by 1.6 million barrels starting from May. It is expected that this decision, coupled with a 2 million barrel cut announced in autumn, could cause a shortage in the global oil market. It is worth noting that the likelihood of this is quite high, given that we are talking about a decrease in production by 3.6 million barrels, which corresponds to 3.5% of the world supply. According to analysts, the measures of OPEC Plus are insurance against expectations of a slowdown in the Eurozone and the US in the second half of the year, as well as a more sluggish economic recovery in China. Meanwhile, Russia could cut oil production by 700,000 barrels in March, adding to the uncertainty about overall production. Earlier, Russia producers announced plans to reduce production by 500,000 barrels per day, against the backdrop of Western actions to impose an embargo as well as a price ceiling. An additional trigger for price growth may be the latest report from the International Energy Agency, according to which during this year global demand for black gold could grow by 2 million barrels per day to 101 million barrels, amid increased consumption in the Chinese economy, which of course right now is recovering after the lifting of quarantine restrictions. With that said, oil is heading for new highs. So guys, that's all what I wanted to tell you about the current market situation. If you have questions and something is not clear, write to the chart. As a short summary, I recommend shorting the dollar index and buying gold and oil. Doesn't matter, Brent, WTI. Now we can sum up the results of the contest and randomize the winners of the AMarkets Spring Raffle. Just a second. Look at this site. Dear traders, it is worth noting that this time we have a record for participants, 9,723. Unfortunately, there are only 10 awards. So, the moment of truth. Good luck to everyone. So we have 10 winners. Congratulations from the AMarkets team. I remind that personal managers will contact you and tell how you can get the prize. Guys, thank you for your attention and